Welcome to Under the Basswood Tree with Basswood Counsel, a podcast where we bring you brief, valuable conversations and insights to help you navigate the complex world of business transactions. From cross-border deals to international tax structuring, we cover topics across all industries. Our team and colleagues will share their insights and provide practical tips on key issues for you and your business. Let's get started.
Welcome, everyone. Thank you for joining us. It's a tough act for us to follow tax, as always. But hopefully, in this retrospective, we'll be able to enjoy a little bit about looking back as we sit under this basswood tree. Just imagine it there. But I think this is a nice opportunity, again, for us to take a look back at what we were expecting, where we were about a year ago, and where we've come through. I know for some of us, I think I mentioned to somebody today, it's been 8 years, but I actually realized it's only been 10 months of the new year. It's kind of a nice running theme about what's been happening. And really what Jephte and I will be sitting up here talking about really is taking a look at the changes that have come across the year, primarily looking into the area of securities, banking, finance, really looking at those changes that we've seen and the development and progress that's happened. It's quite possibly unprecedented. Be very careful with that word. But really what we're looking at is quite a contrasting period of time, especially when we think about where we were last year around this time in October or even out of the summer, where we had the Biden administration quite handily working on quite a bit of quite a broad administrative agenda, administrative-wise, new rules and trying to implement those and put them in place, and where we are today. And I think that journey is also very important to take a look at and understand what those changes are, because again, now we'll be looking at quite a different pathway, and a lot of people might have planned a certain way and are looking at it, and those changes are profound. And being able to understand what was there, where we're going now, and being prepared to engage with those is very important for any business, for any advisor to be able to have a good handle on and go through. And us as a team at Basswood, we want to be positioned in order to be able to give clients those insights, the other partners and professionals we work with, to collaborate on how clients need to be able to navigate those things. And it all starts from understanding exactly where we stand and where we've come from. And, looking to Jephte, I'm going to come to you first and really explore this. Can you give us a context of sort of where things were like, especially in the securities area? Where were we about this time last year?
Well, first of all, I guess start with the notion that elections have consequences. So with that, last year around this time, we were considering a possible Harris administration or Trump, and of course we saw what happened. So last year around this time, the SEC had several rules again, focusing primarily on investor protection. We had rules such as the private fund rules, which required more disclosure from investment advisors as far as conflict. We had the AI rule dealing with predictive analytics, where investment advisors use AI in making decisions. They have to disclose it to clients and make sure they have internal policies that govern or restrict a conflict of interest. So overall, last year, we had an agenda that was robustly focused on investor protection. Following the election in January, which Trump, one of the first acts was the presidential working group on digital asset. And that working group primarily directed the federal agencies, the SEC, the OCC, CFTC, DOJ, their approach to regulating cryptocurrency and digital asset. And again, it was somewhat of a more scale back, whereas it was more, I guess, focusing on fraud, actual fraud, as opposed to, again, a prior administration where if someone fails to, let's say, register or fail to comply with a personal rule, they could be held liable. So now the approach is actually more like, again, actual fraud. Again, although with the caveat, it does not mean that companies or clients should, overlook their obligations under current rules. So again, and then from there with the new chairman Atkins in April. Again, so with the SEC, what we are seeing is a withdrawing of existing rule or withdrawing of existing cases and focusing on new rules that are, I guess, somewhat more market friendly.
Right. Now, in that, if you to kind of orient that, right, you're saying that we're going from more protecting investors orientation to more kind of dealing with actual harm that's experienced and the like. I mean, what would be the real impact for businesses, or whether you're an issuer, you're an innovator in something like crypto and the like? What's the real impact? Is it the difference between the cost of compliance or being able to move faster? What's really the impact? Should people really think tangibly, other than it's something nice for us to talk about? What's the real impact?
The impact was certainly the cost of compliance. You have certain levels of deregulation, right? So the cost of compliance, but also more clarity. One of the concerns of the market with the prior chairman was that there's no clarity as to what the market should do. Like, in fact, the term regulation by enforcement. You did not know that you were doing something wrong until you got a knock. Mm-hmm. So with the new chairman, so there's more clarity with respect to crypto. In fact, the most recent reg flags, which is the agenda for the fiscal year, I think there are probably like 4 or 5 rules strictly addressing crypto, digital asset trading, make it easier for tokens to raise capital formation. So for the market, it's a good thing. Again, more clarity, a little bit less regulation. Mm-hmm. And we are seeing it even with several IPOs, like Circle and other companies in the space have gone IPOs. And you're also seeing M&As again, because the market knows what to expect, so they can plan accordingly.
Now, something interesting you mentioned was this regulation, through enforcement. Is there a difference between what we saw, how, again, this approach of through enforcement, has the agenda for the current administration been founded in legislation, or has it been more rulemaking, or is it the policy statements? Because I guess that has an impact on how comfortable actors in the market are, right? Is there a difference in terms of their approach, or is it more more sort of a feel-good factor? How much should clients look to that and around?
It's more of a policy approach. For the most part, you would need Congress to act to change certain statutes. And we know that takes a while.
Right.
So you would need Congress. And then the agency itself has, again, the agenda, the chairman, which, by the way, the way the commission is set up, you have 5 commissioners, generally 5. 3 of whom, you can only have 3 from one party. So right now, I think we have 3 from the Republican Party, 1 from the Democrat, Crenshaw. So again, so the chairman would set the agenda. This is what I want to accomplish. Like, for example, with Gary Gensler, there was an aggressive agenda, rules after rules. So with Atkins, the policy said, this is what I want to do. I want more clarity with crypto. I want more clarity with capital formation. I want to see more IPOs. I want to see more small reporting companies have less so comply. For example, the climate rule, like climate disclosure. Again, the market didn't really like that. So again, not like resending those rules and not enforcing them. And as far as enforcement, you're also seeing not only somewhat a reduction in the enforcement team, right? But also like a less of a appetite to take certain actions. Absent again, your general fraud, etc.
Yeah. And so that's a clear sort of agenda on the security side. Again, unleashing, I guess, the economic beast. I guess one of the questions we look at, and I think was something to contemplate, is we've seen something similar, but maybe more pervasive. When you look at something like the CFPB, where the Consumer Financial Protection Board, where actually the agency has essentially disappeared. How do you think maybe in that instance where you had a pretty, I think, active and consequential department, or actually it's not a department, it's an agency, board that was there, that was shaping how the financial sector was operating, including, non-banks like fintechs and the like, was active, was creating structure, and again, in the interest of the consumer, now sort of gone, non-present, non-acting, non-enforcing, with the intention that hopefully it unleashes some, additional innovation continues. Do you think, again, in that sort of the absence of enforcement and the like, potentially creates a vacuum where people don't know what to do as well? Or is it really an advantage that removing that unleashes that innovation, at least that some thought was being constrained? Is there kind of a feeling in terms of practitioners and looking around that?
I think, again, people know what to do. And I think like now practitioners know what to expect.
Right.
I mean, if it wasn't clear then, I think it's clearer now. So, people know what to expect. And there's still, again, like, the option of, reaching out, asking questions, whether it's to your lawyers or whether it's to the agency itself.
Right.
So if a person wants to comply with the regulations, the option, is available.
Right.
Again, given now there's a little bit more clarity. And we're also seeing it with other legislation too, coming from Congress itself. For example, the Genius Act, which again, make specific requirements for stablecoins, one-to-one, and with liquid securities, transparency. So people, so the market would know what to do.
Right. Yeah, and I think this kind of is, I guess, one of the ones you indicate that where we've seen, in essence, a quite broad and I think sustainable change in the market, where Congress has acted in actually taking legislation and implementing and adopting it, which is the Genius Act, as you mentioned, that really creates a framework for the regulation of stablecoins. And I guess in a way, we should expect to see unleash innovation around cryptocurrencies and blockchain in the United States within that framework, which probably has also implications beyond the United States, right, as we see, and should see more activities around that. Now, do you see that, again, I think really looking around something like the fintech industry, what else do you see kind of for that industry, the impact around it, difference between maybe where they were last year and maybe where they are now? We can see it for those involved in tokenization as far as stablecoins. Are there any other areas that those, fintechs can see? We know CFPB is not really around so much. Any other areas that
CFTC, and with the Clarity Act having clear regulatory tool, which agency would regulate the market? Is it CFTC or SEC? Especially with stablecoins, whether they're acting as a commodity or security. So again, more clarity. Again, so again, where market participants can know how to plan, how to structure their business models.
Fair. And I guess one of the areas where I guess it's a little bit different than where we've seen change to more clarity, I think for fintechs, what we still see today is that there's existed a ambiguity, quite an overlap for a lot of fintechs, especially between where you would see state regulation versus federal regulation. A lot of the fintechs, again, people interact with fintechs more than they know it, right? Whether it's things like the payments, PayPal, Cash App, Venmo, or other ones that are more pervasive in the background, like Plaid or Stripe, the like, is this issue of, are you regulated at the state level? Are you regulated at the federal level? Are you a bank actor? Are you a payment actor? We still don't have clarity around there, and that continues to today. And that will still kind of create, I guess, an opportunity for us to advise, to sort of see where somebody fits and create those challenges. But again, it's a challenge because it requires action from Congress as well as the administration itself in order to push that and really see resolution. So that hasn't really moved otherwise, and we'll continue to probably experience that challenge. And if we couldn't continue to see that challenge for them, it probably will see that innovation in the US is still lagging, whereas I think other jurisdictions have been very clear, like in Europe, and be very clear about how they want to regulate fintech and really be able to push around that. What other areas are you seeing as well that where we've maybe made some more progress versus last year. Again, progress being defined however you want to look at it, but I guess a substantial change between the time periods that have moved.
I mentioned, in the fund space.
Okay.
Again, I mentioned the private fund rules being rescinded. Well, the Fifth Circuit, vacated, but the agency did not appeal. So there's a change in that, and even with from PF with hedge funds with with more than $2 billion in asset disclosures. So now they've extended the compliance requirements. So you are seeing changes and the fintech world broadly, securities world broadly, and of course investment management.
And as we see that, then we should expect that a lot of clients should see a better relief for themselves in that way and more direction. And I would assume that there's more clarity that's coming through that's there, but there's still a bit of ambiguity. I think one of the things we would caution is that, again, there's a very clear business-friendly orientation within the administration to push that forward, which helps a lot. But I think there's also quite a bit of a challenge of this potential for sudden and unexpected changes. I think if anyone remembers Red October, I think it's the Crazy Ivan, right? Where you can have a sudden change. And one example that's clear, which I think we always want to remind clients, was the issue around the Foreign Corrupt Practices Act, right? I think at the very beginning of the year, the administration coming in essence, advised people, we're not going to be enforcing this. Is not going to be a priority. But I think about 3 or 4 months later, despite, informing clients and, I think a lot of lawyers were out there trying to tell clients, look, they might not be enforcing it, but the laws remain on the books. Several months later, the administration did again reiterate, actually, we are going to be enforcing this act. So I think, the name of the game is we're going to have to be nimble. Changes have occurred. They continue to occur, and we try to remain at the forefront of it. But also, too, that things can change very quickly. And I think it's up to us to stay on top of it, work with our partners, the other professionals, and really collaborate so that clients have timely information. They understand, they can plan as best as we can, and really be able to achieve that. And I hope that, it's always interesting and entertaining to see a lot of changes happening, but maybe a little bit of stability would be welcome, so all of us can catch our breath. But I expect that we should have a quite vibrant and active market, especially in the security side and financials side of things. And we'll keep up to date. And our commitment to you, our clients and our partners, is we'll make sure that as quickly as we can, we get that information out to you so you can understand, and then we can plan and work together. And so we thank you for having sat and caught up with us on the year that was, a little bit quicker than the 8 months that have passed by. And we open up if there are any questions that people have.
Wanted to get your questions around, as we have definitely witnessed this sea change from the SEC. And I believe Chairman Atkins said to contemplate the Basswood Tree, we're going from the Buttonwood Tree to blockchain, which we're definitely doing. So could you talk about the tokenization of assets, which is something he's brought up, which is also something that Larry Fink at BlackRock has done a lot of work on?
Yeah, he definitely has been friendly as far as tokenization of asset. Not only you have the crypto task force proposing how those assets can be traded, whether they would be traded, on a registered platform, so as that, and also how those assets can be used to raise capital, and of course, the custody issues regarding it. So there are rules up, there are, I guess, being considered to address that again. The trading of these assets, the how they can be used to raise capital permission. In fact, that's one of the goals of it, is that the exempt offerings, like the your Reg A, your Reg Ds, your crowdfunding, they don't really help as much. So how do you make it where companies can use the examples to raise capital, including tokenization of assets? So we'll see, I guess, more rules, more clarity again, how you can promote that. Also to how workers can use them in trading, like rules for workers, as far as custody, etc.
And I'd say on something like tokenization, I tend to look at it from a sort of, what are we trying to achieve? And I think one of the challenges I think that, is reflected in why it's so difficult for regulators, but also for innovators around tokenization is that a lot of this technology speak is not so much about innovation, but it's about regulatory arbitrage, right? Because a lot of the issues that are coming up, it's a question of, are you dealing with securities laws? Are you dealing with banking laws or otherwise? Because reality is tokenization exists today already, right? We have different forms of how do you take an asset and break it up into other pieces? We have it, right? You have pooled funds. That's a form of tokenization. We have shares and stocks. That's a tokenization of different things, the abstract, right? And trying to fit the technology, something like blockchain, right? And talking about it as though it's an innovation around asset ownership. It makes it difficult. And I think where really the challenge comes through is, how do our laws align with that, right? Are you dealing with a securities issue? Are you dealing with a banking issue? And then you have the mishmash of all our agencies and territories, right? I mean, we even see it now, the issue between who regulates what, right? The SEC, CFTC, again, go back to the same turf battle that exists. And I think until we kind of have the ability of an administration and the legislative being able to sit together and actually be productive around our laws fit for purpose and also have frank conversations, are some of these things that are being attempted to be done, are they just about regulatory arbitrage? And that probably will help that process of clarifying, are we innovating? Are we introducing technology? Are we improving things? Or are we just trying to say something by the same name? And I'll give you an example that Chairman Atkins kind of mentioned in passing, but was very apt at the recent FinTech Week, was he highlighted that one of the issues the agency faces is that one of the pillars of a lot of regulation is this idea of the investment contract, right? That a lot of the regulation or the fights that have happened around crypto and the like is this definition of investment, the Howey test, investment contract, right? It was one thing about talking about an orange grove and the like. Now you're talking about this code and the like. So until those things are resolved, we're probably going to be going around in that circle around it. Yeah.
And so we have to get to that's what you are saying with the presidential working group. So directing all the agencies to take an approach to digital assets. So there's all the discrepancies among them.
There was a question in the back.
So I appreciate you guys. I really do. I mean, hearing a competent recap of where we are from two Black attorneys is very helpful. But here's the problem. What is the risk of disparate treatment under this administration for Black people who try to take advantage of opportunity zones, equity crowdfunding, the OZ types of stuff? Given Lisa Cook, the guy that they kicked out of the military, the Caribbean guy, the talk about how the administration is targeting Black players in professional sports, there's clearly something going on. So as a Black investor, I hear you. All sounds great. I'm an economist. I've been studying this stuff, written a couple of books, but I know that when it gets down to it, I might not be able to utilize the same laws in the same way that white people do. So what's the story there?
I think it's a difficult one. I wish I had the answer easily, but I think one thing that's very clear is that I think from an approach perspective and philosophy perspective, closeness to the administration helps. It doesn't matter what it is. As long as you're close to the administration, I think there's a lot of willingness to have government be sympathetic to a position. So I think that's going to be one thing that I think as practitioners, but also industry participants, everyone's going to have to evaluate how do you get that proximity in order to get that, let's say, sympathetic ear to do so. But as well, it's also understanding where the winds are blowing and trying to position one way or the other and place yourself, right? I think it's been very clear, whether good or not, is that it's very clear. One of the things some people I know clients have asked is that is there anything such thing as insider trading anymore? Right? Because if the president or somebody close is able to stand up and sort of say, hey, you should buy stocks today, and there's an announcement, what happens? So again, it becomes that issue of proximity and the like. And I would say for investors, yeah, you probably want to be close to what's happening in industry. So industry groups are going to be more important than they've ever been, right? So maybe the swamp doesn't get drained because things in Washington will matter and continue to matter. And having a way to come together as a group and really be able to engage with the administration on some level, because again, the administration responds to squeaky wheels. And so maybe that's really the approach, is to do that. I don't know, Jephte, if you...
I would call it a squeaky wheel. I mean, there's lobbying, right? I mean, I guess lobbying. Because one thing I would say, if we talk about, minorities, Black people, lobbying, even for something as a definition of the accredited investors. Again, I think, the argument is that a lot of folks don't fit that definition. So if there were to be changed, again, a lot of folks will be able to invest. So I think if I were a Black group, per se, or an affinity group, I think one of my goals is to how do we change the rules to include everybody to access the capital markets.
And one last thing to add on that, I think I know earlier on when we had a panel with the 100 Women in Finance, and one of the things we picked a theme on around was AI. And we've seen that one of the concerns that's really in the industry, again, with this fast change, with I guess the termination of the CFPB, was one of the things they were focused on and starting to really be attuned to was the use of AI in lending decisions. And a lot of the fintechs are relying on that, even major banks. But the fintechs were concerned because they're sort of the pointy spear in the shadow banking side of how a lot of new lending is happening. Big commercial banks are not doing a lot of direct lending. They're actually lending to fintechs and others to lend. Now, if you think about it, if those on-lenders are using a lot of AI, which there was a large concern about discrimination in their models, that's a concern that potentially for groups that have been historically been disadvantaged or discriminated against, or who don't weigh heavy in those developed models, could find themselves cut out of the system. So again, I think there's an opportunity there. I would say engaging with those building the models, developing, again, more sensitized competitors that are potentially fairer. But I think that's a concern that's probably the administration may not appreciate today, because again, that was inside an organization they're not positive around. But it is a potential concern for everyone that slight, there are some good regulators that you want around because they see things and deal with things that have externalities you can't manage. So that's something else I would suggest. Yeah.
First of all, thank you for your remarks. Very enlightening. I'm actually glad that you brought this up, the fintech issue. Two things. I do a lot of work with small businesses. Oftentimes I'm brought in at the last minute to solve a problem, challenge. Most of my work is in the emerging markets. On the fintech side, I don't know your take. I've got a financial planning out of the background that there's a couple of fintechs that I've advised in the past. So I'm not a fintech person, but one of the things that I see as a challenge or an issue and a challenge, and also based on what's going on in this administration, I think there will be a growth. And my question to you on that front is, as this administration starts to roll back certain regulations, what do you forecast in terms of these outliers, fintechs, and their and the like, in terms of using these systems where you're predicting something, but you also are discriminating against this particular group or people? I see potential for audit. The big four come in and start to do an audit and what have you. That's the first question. That's one question. Second question is, I was just in Brussels a month ago. There's I can't say the name of the company, but It's a Congolese Belgian person. And one of the things he has a challenge with is he's raised a lot of capital here. He's doing business in Africa. One thing he said is, oh, well, I hear the Trump administration is not going to prosecute for FCPA. This is good because I'm trying to do business in one particular country. So going forward, what is your answer to somebody like that who says, hey, Trump administration says they're not going to, well, they didn't say they're not going to prosecute. They said that they want to enforce it like they were the previous administration. And then the UK have your own version of FCP, which is actually much higher, right?
You want to take the first one, or do you want to?
The answer would be like, the rules are in the books, right? So my advice would be, just because you think that it's not being enforced, it doesn't give you the license to do it. And just because it's not enforced against certain people, it doesn't mean that it won't be enforced towards you. And to your other point, I don't know what's the statute of limitation, but to your point, if there's a change in administration and there's a record of you having violated those laws, you're still on the hook for them.
Yeah. So I'll take that. I'll take the other one first. The question on AI audit and the like. We have a very good panel we did on that. We have some good articles around this idea of AI auditing and AI understanding the impact of AI within organizations, and do companies really know what they're using, especially at the board level, right, and dispensing their duties. I think the issue is, yes, with any technology, with any kind of tools you use, eventually the issue comes up of audit post or liability post. I think it's more a matter of really good corporate governance, and which we would always kind of emphasize is you need to have good corporate governance about what you're doing, and your investors will, at some point, will look at it. They will want to understand how have you implemented, because that's that long-term liability that you accrue. On the issue, again, same thing around the FCPA. One, the U.S. is not the only one with what we call long-arm statutes around bribery, right? There's the UK Bribery Act. The European Union has its own. In fact, as well, I believe China also has its own related to that, because, again, there's an impact on competition. And I would say for even somebody, if they, again, I think the Trump administration as well, that first pronouncement around not enforcing it, they have walked that back. They are investigating, they are prosecuting. There's a secondary aspect to it is they have made some changes to some of the rules as far as what fits into what they call almost like facilitation payments, right? The difference between paying for a customs inspector to go actually inspect. So, whatever, you pay them fuel to go actually inspect your goods versus for them to look away from inspecting your goods, right? There's a difference in there. But I would say for most clients and for most people, investors or people building businesses, the issue will normally come up more so when you have partners or when you want to scale up. Because if you look at most contracts where everyone's doing cross-border business, there is certifications, there are representations and warranties that you have not committed any acts in violation of those. So almost like a private enforcement. So there is a consequential issue for them is that, you pay that, somebody finds it, you might actually lose on your private side versus more the government side. And I think finally, with terms of prosecution, normally the DOJ doesn't forget. Eventually somebody picks it up. It's not, if the only way you can do business is that, maybe you should do something else. Unfortunately, sorry.
I'll add to the AI question, because I believe like in a common sense approach. Again, AI is not the first technology that we're dealing with, has human nature, right? So you should know, okay, if I have a technology that could discriminate, do I have compliance procedures to address it? So again, it's not so much the technology, it's the approach. You have to have compliance, to address what it is a discrimination or insider trading, etc. So the approach should be, again, have the compliance procedures. Common sense.
All right. Thank you, everyone.
Thank you.
Really appreciate you coming. We'll see you in 20 years.
We hope you enjoyed this episode. To stay up to date with the latest legal insights and Basswood events, please follow us on our Basswood Counsel LinkedIn page and visit our website at www.basswoodcounsel.com. Thanks for tuning in, and we'll speak to you next time.